Did you know there's actually 3 different types of mortgage lenders out there? Today, we're going to go through all 3 of them, talking about the most significant pluses and minuses for each, and you can make a decision on which one you'd like to work with. I myself am a broker, so I'm a little bit biased, but you can make your own decision which one you think is best. There's lenders, brokers, and banks. We're going to go through the differences so you can make an informed decision on which one you'd like to use on your next transaction. The first one we're going to talk about is lenders. So what's unique about retail lenders is that everyone that you're going to deal with on the loan side is likely going to be an employee of the same company. So whether it comes from an underwriter, a disclosure, a processor, an originator, whoever you're talking to over there, they're likely a W-2 employee from the same umbrella company. Now, the benefits of this is that everybody has the same manager who's directing them to do the same things, which can create for a much more seamless transaction. One thing that's not so great about retail lenders is that they have a very tall corporate structure, meaning a lot of people on the ladder have to get paid, which in turn makes it so that your rate or your cost might be more expensive than the other options. So their biggest strength is also their biggest weakness. Their large corporate structure allows them to do things more seamlessly and more efficiently, but it also makes them more costly. Working with a retail lender can be the right decision if you have something that's particularly difficult about your file or about your property, or just something that you're really unsure about. However, with their large company structure and having control of every single level, that tends to mean that they have to inflate their margins in order to pay for everybody that's within their company, including health insurance, benefits, all that stuff. So they tend to be a little bit more expensive than the other options. The second option is mortgage brokers. Now, a mortgage broker can be anywhere from a large organization to a mom and pop shop. What they will do is they will have their license to conduct loans, and they will use other companies' resources and underwriting in order to get your loan done. What they will do is they will utilize other companies' resources, companies like Rocket Mortgage or United Wholesale Mortgage that you might have heard of. They will take their underwriting, their disclosures, whatever they've created for their mortgage process. This broker can choose to send loans to that lender, or they can choose a different one if they like someone else who's got better pricing, better products, a specific program that they want. They have the option to pick and choose which lender to go forward with. Brokers can be a great option because they typically have availability of a wider set of programs and a retail lender who's only got the programs available at their one company. If there's a lender out there who came up with a very unique product, very unique pricing strategy, something along those lines, all a broker has to do is get an account with that lender and start sending loans their direction. As opposed to a retail lender, they would have to adopt their own guidelines, maybe sign up as a correspondent for one of these lenders where they have to underwrite it and then it gets underwritten again by the ending investor, something along those lines. It's more difficult to add more products as a retail lender. As a broker, you just simply have to sign up with that lender and you can start sending loans to them. Another reason that a broker could be a great option is the fact that they have multiple choices. So even if you have a pretty traditional loan, either a standard conventional, standard FHA, they can shop around, see who's got the best interest rates and not be pigeonholed to just one product and the pricing from that one lender. One other thing that's typically good about using a broker is that they have a flat corporate structure, meaning that there's not a whole lot of layers of corporations and managers to pay, meaning that they can provide lower fees and lower rates to their clients. With the availability to shop with a plethora of different lenders and the flatter corporate structure, brokers tend to have the best pricing on the market. The downside of brokers is the same reason that there's a benefit to them. They don't have control over the lender's guidelines, the underwriting resource, whatever that may be. If that lender decides to make a change, the broker that you're talking to doesn't have any control over what changes are made. Now, it doesn't mean that they're completely in the dark. They still have access to talk to their account executives. They can typically call their underwriter, whoever it may be. They have contact with those companies. It's just there's not a whole lot of influence when that lender decides to make a decision. It's final. The third type of lender is banks. And you know banks, Chase, Wells Fargo, US Bank, those places offer mortgages. One thing that's important to mention with banks is that the bank's number one goal is to get your assets in their checking, savings, money mutual accounts, retirement accounts, whatever it may be. They'll provide mortgages as a service to keep your money in their bank. And one of the issues with the banks is that since mortgages are not their primary goal, it's typically not what they're best at, and they tend to lack in the customer service department. A lot of banks that I've had experience with, they have their underwriting and processing disclosures somewhere overstate that you typically can't get a hold of. It can sometimes even be difficult to get a hold of somebody who's currently in control of your file, which I've experienced with some clients who decide to go with banks instead of me. For instance, if you have a difficult file, you send it to a bank and it's not going to close on time because you can't get an underwriter to agree with how you calculate your income, whatever it may be. That underwriter might just push it to the side or push it to a different push it up the ladder to their senior underwriter, and you're just sitting there waiting for an update. If you go past your close of escrow, you could have implications of rate lock extensions. Sometimes there's per diems within the contract, which mean every day that you're late, you have to pay another fee. The same thing with rate lock extensions. Every day you go past it, you have to pay another fee, and it can get very, very costly. If you got up to 2 months late on a transaction, you can easily see how it could cost you tens of thousands of dollars. One thing that's good about banks is they have these things called private client services. And the way I've seen a lot of these work is that if you were put something, say, say, $250,000 into an account with this bank, they will give you a whole separate set of guidelines, separate set of customer service, separate set of rates to go with your mortgage. And these rates can be extremely competitive. Sometimes they're even the lowest rates on the market. And so when I'm talking to clients about different types of lenders, or if I'm competing with a bank, so what I tell my clients who show me they have a private client offer from a bank, I'll typically let them know flat out that's probably the best rate that you're going to see unless you go get a different private client offer from a different bank. Again, this supports my original theory that getting your assets in their bank account is their number one priority. Doing your mortgage is second. Giving them your assets, putting it in their bank, they'll offer you a higher level of service and lower interest rates on the mortgage. So which lender should you pick? Well, I'm a mortgage broker. I'm a little bit biased in thinking that you should work with a mortgage broker. But one of the main reasons being that they typically have the lowest interest rates aside from They typically have the lowest interest rates aside from banks' private client experiences. So if there's something unique out there, a retail lender or a bank might not even know about it, and a broker will have access to it. If you have a file that's particularly difficult, if you've got some beat up credit, if you don't know how your income's going to work out, if you've got 4 borrowers on the same transaction, maybe you want to go with a retail lender because they're going to have more control through the transaction and give you some more surety to close. Now, it doesn't mean that a broker can't close that transaction. It just means that there's some more surety with a retail lender to get that closed. Some retail lenders will have higher interest rates based on how their corporate structure is, but it varies based on who you talk to, what company it is. This is not the case for every single retail lender out there. It's just my experience, what I've seen from a lot of them. Typically, I only recommend working with a bank, again, if you can get access to their private client set of products. Aside from that, if you can't get access to their private client suite of products, their customer service can be very inconsistent and can cost you a lot of money. And in my personal opinion, it's not worth the risk, even if they have a better interest rate than a retail lender or a broker. One other thing to keep in mind, who you should choose, go who you're ever most comfortable with. If you talk to a broker, a lender, and a banker, and you're most comfortable with the retail lender, but he's got the highest interest rate, but it's only by 1/8% or maybe 1/4%, I would still recommend you go with that retail lender because there's a lot of emotion. There's a lot of communication that's going to go back and forth between you two, and it can be a very emotional transaction going through real estate because it's where you live. It's very personal. You want to make sure that you're comfortable talking to the person that you're working with. Don't go strictly based off rate and fees. Go with who you're most comfortable with. Now, if there is a big discrepancy in rate, you might want to go with somebody who doesn't vibe with you as well, doesn't have the same communication style that you do. Maybe that's okay. It doesn't mean they're not professional. They just have a different communication style. So you have to kind of weigh those options and make the decision that's best for you and your family. Don't go with this particular lender just based on this one transaction. You want someone that's going to help you manage this mortgage over time. You don't make just one mortgage payment and everything's done from there. You're most likely going to refinance your mortgage in 3 to 5 years. You're probably going to sell your house once or twice. And if you find the right person the first time, it's much easier to get refinances done, much easier for your next sell and buy transaction, whatever it may be. So there you have it. That's the 3 different types of lenders. If you have more questions about it, please comment below. I'd love to hear what you guys have to say. And of course, like and subscribe to see more content like this. If you have any suggestions for what my next video should be, leave a comment below and I'll be sure to make a recording about it.